saying. But in cricket terminology, we say that, all chartered accountants are kind of Rahul Dravid. We know the technology, we know the techniques and everything. But when it comes to Insolvency and Bankruptcy Code, in addition to knowledge, it requires different skill sets and different temperament. So, Avil is a combination of Rahul Dravid and Virendra Sehwag both. He knows the sound techniques in which one has to hit square cut or cover drive. But without that also, he possesses a distinguished skill like Virendra Sehwag, who can hit scores runs based on purely on skills. So it's a combination of knowledge and skills and temperament. That's what I think IBC is all about. And you will listen more from him, and that's what is required. And it offers a great opportunity for young chartered accountants, or who are already in the practice for 5-7 years, because it allows you to act like an entrepreneur. So we are always suppressing our those abilities and skills which as an entrepreneur, as businessmen, to revive, to really contribute to the national economy, not in just in the form of collecting more taxes for the government, but really contributing to the revival of the units or businesses. And that's where probably the fund could be. And so more to listen from Avil, more to get into the nitty-gritties. And it's a great learning and opportunity for everyone who wants to get into this area. So without much now, talk from my end, I would request Amit and the Nihar maybe to take over and move further. Thank you.
Thank you so much, Manoj sir, for your wonderful words. I would now request our member CA Jinesh Savla to introduce our speaker CA Avel Menezes, as well as our moderator CA Amit Chheda.
Good evening, friends. It's my absolute honor to introduce our esteemed speaker for today's session, a professional who has carved a niche in the field of insolvency and resolution practice, CA Avel Menezes. Avel Menezes is a fellow chartered accountant, bachelor's in law, master's in commerce from University of Mumbai, a registered insolvency professional and a registered valuer for securities and financial assets. He is the founder promoter of Aegis Revolution Services Private Limited, a registered insolvency entity with Insolvency and Bankruptcy Board of India. He has more than 20 years of experience in finance and banking sector and has worked with reputed organizations like Tata Chemicals Limited and ICICI Limited. He started his independent consulting and advisory firm in January 2012. He is one of the earliest insolvency professionals registered with the Insolvency and Bankruptcy Board of India, having handled more than 25 large and complex IBC matters. He specializes in insolvency resolution services, including liquidation process, debt restructuring, and legal and financial advisory. He has handled some of the largest and complex insolvency assignments of corporates such as Videocon Group, Future Group, Sterling Group, etc., which involved large claims in excess of 10,000 crores and more than 25 members in the Committee of Creditors. He is invited regularly as the speaker for various seminars, workshops on the topics related to the Insolvency and Bankruptcy Code 2016, conducted by the Ministry of Corporate Affairs, Insolvency and Bankruptcy Board of India, National Institute of Bank Management, the Institute of Chartered Accountants of India, the Institute of Company Secretaries of India, the Institute of Cost Accountants of India, Indian Institute of Insolvency Professionals of ICI, ICSI Institute of Insolvency Professionals, various government departments, study circles, industry associations, etc. With such a wealth of knowledge and experience, we are truly fortunate to have CA Avel Menezes with us today to guide us through the crucial topic. Let's give him our warmest welcome.
Welcome, Avel. I warmly welcome you on behalf of all the members of CVOCA Association as well as the participants present here.
Yeah, thank you. So first of all, thank you to Manoj sir for those kind words. I really appreciate, I think, whatever I am today. I think for every chartered accountant, the foundation is the firm where he does 3 years of articleship. And I think a lot what I am today, I owe to Shayan Modi, Manoj sir, Jaideep sir, and Himanshu also. So I think with these words, I will start the presentation, and thanks for inviting me. If there are questions,
I will just 1 minute. We just have a couple of formalities to begin with.
Okay,
yeah, Jinesh.
Yeah, I want to do
So let me
moment
introduce CA Amit Chheda, who would be our today's moderator. CA Amit Chheda is a fellow member of the Institute of Chartered Accountants of India and in practice since 2002. He has a professional experience of more than 20 years. He heads audit and assurance division of his firm. His portfolio of clients includes large commodity trading firms, IT companies, stock exchanges, clearing corporations, depositories, shipping companies, manufacturing companies, retail, etc. He has been regularly conducting management review, internal and statutory audit, due diligence, system audit, investigation and forensic audits, etc. His focus area is on IFRS implementation, valuation, system audit, designing MIS for management, etc. He was the president of CVOCA Association until June 2023. He is an active member of various committees related to valuations and due diligence of Western region of ICI. He is a regular contributor to various journals of NGOs and has been regularly speaking on the various topics of auditing and assurance. He has also cleared the resolution professional exam conducted by IBC. With this, please welcome our moderator, C. Amit Chheda.
So welcome, Amit,
Thank you
and
so much.
thank you for accepting our invitation to moderate today's session. Avil, I would just like to present a small token of appreciation from our end to you, and I would request our committee chairman, CM Manoj Shah, to present the e-memento to our speaker for today.
Yeah, well, pleasure to have you here and see you more and more of your presence in our seminar.
Thank you, sir. Thank you. Thanks a lot.
I would now request our committee joint convener, CA Ritesh Savla, to present an e-memento to our moderator for the session, CA Amit Chheda.
Thank you, Amit Bhai, for being the moderator for the session. And please accept a small memento as a token of our appreciation.
Thank you, Ritesh. So I think without much ado, Amit, I'll hand over the session to you and Avil. And participants, just a small instruction. This is an interactive session. So in case anybody has any questions to ask the speaker, you can put it in the chat box and Amit would be glad to take it up as and when, is the suitable time. Thank you, and over to you, Amit. Amit, are you there?
Much, and it's pleasure is always mine.
I think Amit,
I'm audible, and congratulations for your acting regularly. With participants, I realize a lot of young members on the entire gamut of insolvency bank. हो जा रहा है आपका? Am I audible?
I think
Hello?
Amit, you were disconnected in between a little bit. Amit is facing some technical issue, so I would request Avil to start his presentation.
Yeah, sure. Thank you. So good evening, everyone, and welcome to this presentation on the Insolvency and the Bankruptcy Code. Now, as I think most of you are aware that the Insolvency and the Bankruptcy Code was enacted in 2016. The law was operationalized in 2017. And it's been almost now 8 years that the IBC code is in practice. Of course, a lot of water has flown as far as the insolvency and bankruptcy is concerned. But along with the goods and services, the GST regime, IBC has been one of the potent commercial legislations which has been enacted by the India government. And I think it's a lot of rich dividends have accrued to the bank in terms of resolution, recovery, and there has been a change in the way the relationship between a lender and a borrower had to be there. So earlier, I think most of the borrowers were not, they basically, I would say, didn't care about the relationship with the creditor. It was more of the creditor be aware, but currently the regime has changed and now it's the borrower be aware. So now there is a risk of losing the company as compared to earlier, there was no risk of losing the company. So if you defaulted earlier, you could enter into negotiations with the banks, you could enter into settlement talks, the banks could take legal recourse, but for them to take possession would take a long time. However, thanks to IBC, the day you are admitted, the entire shift, the change in control happens to an insolvency professional like me, and thereafter the process starts. So losing the company is one of the biggest fears for any promoter. And that's what IBC has done. It's basically changed the entire gamut of relationship between the creditor and the borrower. In fact, a lot of settlements are now happening pre-IBC, more than the companies which are coming into the insolvency process. A lot of the settlements are happening. I think a recent case, which everyone is aware, would be Byju's. They weren't paying, but once they got admitted, they did pay BCCI, and that's how Insolvency and Bankruptcy Code is one of the potent legislations today as far as resolution or recovery is concerned for banks or even for operational creditors. Now, as a part of the presentation today, I would give you a brief of the Insolvency and Bankruptcy Code, because I understand a lot of you are young members who may not be fully aware with some of the jargons that we would talk about in the insolvency and bankruptcy. Thereafter, we would go to the Q&A, which would be facilitated by Amit Chheda. So maybe in the first 20-25 minutes, I will take you through the presentation flow and some of the opportunities which are there. We would also speak along with this. So what exactly is the Insolvency and the Bankruptcy Code? So as you can see on the screen is the preamble of IBC. So every legislation will have a preamble. So IBC says it is an act, it is a code to consolidate and amend the laws relating to reorganization and insolvency resolution of corporate persons, partnership firms, and individuals in a time-bound manner. So the first emphasis is on reorganization and insolvency resolution in a time-bound manner. Earlier, there were different laws which were applicable to different people or different kinds of debt. There were commercial courts, there was a DRT, there was the High Court under the Companies Act, there was CIRP, which also had BIFR as the Board of Financial Reconstruction, where sick companies used to get admitted, is what I would say in the parlance of a hospital. But CIRP and BIFR were ineffective, and that's where the India government thought about getting the Insolvency and Bankruptcy Code, because this was supposed to be one of the fastest turnaround mechanisms. The Reserve Bank of India had also come up with multiple restructuring schemes. You would have heard about the CDR scheme, which is the corporate debt restructuring. Then there was the SDR scheme, a strategic debt restructuring. Then there was an S4A. So multiple schemes have been brought out also by the Reserve Bank of India to help restructure the debts, because every company which goes under stress, sometimes the stress is cyclical, sometimes it's a man-made situation by the promoter by siphoning off. But in most of the cases, the initial stress is always attributable to business, is also attributable to the risk which has been taken by the promoters, to the business cycles, maybe change in product, change in technology. So you will have to give a breather rather than getting into recovery for everyone. You will have to get into restructuring. So a lot of these mechanisms were already there, but they were not working as effectively as it was required. So in 2016 came the IBC, and one of the main objective of the code was reorganization and insolvency resolution in a time-bound manner. So prior to IBC, the study showed that an average time to resolve an issue was 4.3 years under various acts. Under IBC, they said a maximum of 270 days, which they again changed to 330 days. So IBC, to a large extent, I think around 2 years is now the average time for insolvency resolution. And a lot of resolutions have been done in a time-bound manner. So this gives an exit to a corporate debtor, a new lease of life. So the idea about IBC is not recovery, it is resolution. The focus is on resolution of the corporate debtor. If the corporate debtor cannot resolve on its own, then it will change hands and it will go to a different person. The promoter can also participate in the resolution process, and he can also submit a plan to the lenders, whom the lenders can then evaluate, negotiate. So the promoter participation is also one of the key objectives or key factors of the Insolvency and Bankruptcy Code. What is the second objective of the code? The second objective was to maximize the value of assets of the corporate debtor. So maximization means what? Everyone understands the time value of money. If you resolve a debt in the shortest possible time, see, this is not an asset only of the promoter or of the lenders. This, at the end of the day, is a national resource which will help create jobs, which will add value to the exchequer in terms of taxes, be it direct taxes, indirect taxes. It will help into the growth of the company as well as the country in terms of GDP. And it also helps in the economic growth of the region. Imagine a factory being closed for 8 years, 10 years, the entire growth of the economy or of that particular region goes down. So the second was to maximize the assets, value of the assets of the corporate debtor. The third was to promote entrepreneurship and availability of credit. When you see promote entrepreneurship, today, if you have defaulted, so society looks at it as a sin. So the government is now coming up and saying that in case you have defaulted, it is fine. It is not a sin. You can again start. There is a fresh start which has also been given to entrepreneurs, because as an entrepreneur, you will take risk. You might have taken 10 risks. Out of 10 risks, not 10 will go through. Probably 7 will go through. In some cases, 0 would go through. Maybe in some cases, 10 on 10 would go through. So an entrepreneur is a person who has a risk-taking ability. He will get men, material, resources, money all together and set up a factory. He will set up a venture. So the idea is not to put him down by virtue of failure of one business. So failure of one business does not mean that entrepreneurship is dead. So the government has said that the objective is also to promote entrepreneurship, and that is why the control shifts to an insolvency professional and to the lenders by way of committee of creditors. It will also promote availability of credit. Now, corporate bond market also is very non-existent. Only the A-rated companies, AA rated companies, AAA rated companies have access to the bond market. The small companies do not have access to bond market. So that was also one of the objective. And lastly was to balance the interest of all the stakeholders, including alteration in the order of priority of payment of government dues. So government dues are considered to be sovereign dues. Everyone understands that you can probably default, but you cannot default on government dues because sooner or later the law will catch you. Now, as far as IBC is concerned, they have altered the priority even of the government dues. The government dues fall later in the priority. So the government itself has altered the priority in terms of payment. So this is the objective of the code. Again, I will rephrase. It is a law for reorganization and insolvency resolution It is not a law for recovery. It is a law to be done in a time-bound manner. If you fail to do it in a time-bound manner, then the company gets into liquidation process where the assets are sold on a piecemeal basis. So the first objective is corporate rescue. Thereafter comes maximization of the value of the assets of the corporate debtor. Thereafter comes promoting entrepreneurship and availability of credit, and then balancing the interest of all the stakeholders. So who are the stakeholders? The secured creditors are stakeholders. The workmen, the employees are stakeholders. The vendors, the service providers are stakeholders. The government itself is a stakeholders. And lastly, you also have the preference shareholders as well as the equity shareholders also as the stakeholders. So this was primarily to give you a glance about what IBC talks about and what is the preamble to the code. In the subsequent part, I would tell you who can initiate this process. So everyone, I think, understands that there has to be a debt and there has to be a default. So if I have to trigger an IBC process against a corporate, the minimum default is 1 crore rupees. So any corporate who has defaulted on 1 crore or more, the creditor can initiate a process of corporate insolvency resolution process. And once the process gets initiated, it gets initiated at the NCLT, which is the National Company Law Tribunal. So an application has to be filed with the NCLT. The NCLT is going to look at the application. If they are convinced that there is a debt, there is a valid debt, and there is a valid default, then in that case, they will admit the petition and the corporate insolvency resolution process will commence. So who can initiate? The first person who can initiate is a financial creditor. Who is a financial creditor? In a normal parlance, a financial creditor is a bank who has lent money against time value of money. So anyone who has given money to the corporate debtor, lent money to the corporate debtor against time value of money, that means there has to be an interest component to it. There has to be some consideration to that. So I cannot just give you 5 crore rupees and say I've given you 5 crore rupees repayable on demand. So if someone has given 5 crore rupees repayable on demand, then you send a demand notice after 2 years, 3 years saying that please give back 5 crore rupees. Now there is no interest component in it. It is not a financial debt. It is not a financial creditor. So an application cannot get initiated under section 7 of the code. For you to initiate a section as a financial creditor, you have to be a person who has lent along with interest, that is time value of money. So what you have to furnish is the event of default, that there is a default and there has been a minimum debt. Thereafter, the second class of people or creditors who can initiate are known as operational creditors. So who are operational creditors? Anyone who has provided goods and services to the company, either to the company or in a normal parlance of the code, we say corporate debtor. So anyone who has given goods or service to the corporate debtor, be it a vendor, be it even a chartered accountant who has done the audit, the fees which are pending, the fees which are due, he is an operational creditor. So if it is more than 1 crore, he can also file an application to initiate corporate insolvency. Workmen, employees are also operational creditors. Government for GST dues, income tax dues, TDS dues, provident fund dues, ESIC dues, custom dues, any of these dues fall within the gamut of operational creditors. So they can also file an application under section 9. Here also there has to be a debt, there has to be a default, but only in the case of operational creditor, there should not be any dispute because IBC is not a recovery mechanism. If there is a pre-existing dispute, for example, as a supplier who has supplied goods and the goods are defective, the goods are not as per the terms of the purchase order, the goods are not as per the quality which was required, the goods are probably of a deteriorating quality, then in that case, in case there is a dispute which has been created, you cannot create a fresh dispute. In case there is a pre-existing dispute, then you cannot come to IBC, you cannot make an application to the NCLT. The NCLT will reject this application. Finally, the company himself can also apply. So if I am a corporate debtor, I can also file an application under Insolvency and Bankruptcy Code to initiate a corporate insolvency resolution process. One of the classic examples is GoAir. So GoAir has filed an application under Section 10 saying that I am unable to pay the debt, I need a debt restructuring, I need an insolvency resolution. As a promoter, I have no further money. So let this company go under IBC. Let people come evaluate and let the lenders decide what is to be done by the company. So a Section 10 application is also filed by the corporate debtor. So financial creditor, operational creditor, company himself can also file a Section 10 application. Now, what happens when the application gets admitted? Once an application gets admitted, the power of the board is suspended. The board has no power. Does it mean that the board is suspended? In normal parlance, that is what is said, that the board is suspended. But mind you, the board is not suspended. The power of the board gets suspended. So if the power of the board is suspended, that means can you call a board meeting? Yes, you can call a board meeting, but what are the board of directors going to do? They cannot pass any resolution because they don't have any power. So generally, board meetings are not done during the CIRP process because all those powers are vested in an insolvency professional who either acts as an IRP, interim resolution professional, or a resolution professional, or if the process fails, he becomes a liquidator. The control of the entire company is transferred to an insolvency professional. So you get into the shoes of the board of directors, the entire control of the assets of the company, of the people, of the infrastructure, of the bank accounts, everything comes to you. You are responsible for running the company as a going concern if possible. You are responsible for completing all the compliances. You're responsible even for preparing the accounts, finalizing the accounts, and even signing the signing the balance sheet, which will later on get audited. Can you do entire stuff on your own? The answer is no. Can you appoint professionals? Yes. Are you supervised by someone? Yes, as an IP, you are supervised by the committee of creditors, who are essentially bankers in 99% of the cases. In case the company has no financial debt, that means it has not borrowed from any banks or there is no financial debt, then there are operational creditors who can also become a part of the committee of creditors. So as an IP, are you supervised? The answer is yes. Can you take actions on your own? The answer is no. All actions are subject to the approval of the committee of creditors. So most of the IPs or most of the RPs, we would call a meeting of the committee of creditors, apprise them of the facts, get to an understanding about the company, be on the same page as the creditor, and then take decisions on running the company, about the cost, about the cash flows, on what the lenders think that should happen and what is the view of the RP. Because the lenders, the banks have been in this company for long. The RP has just come into the process. The RP is not a superhuman, but along with the creditors, it's a partnership between him, the committee of creditors, and also the promoters wherever they cooperate to take the company, to navigate the company through the entire process. So this process, as I've said, is a time-bound process. 180 days are given, a one-time extension of 90 days. So 270 days, the process has to complete. In case there is a litigation, 330 days. Sometimes the NCLT also gives you some more time in case you are at the verge of a resolution. And in case the process fails, if the process fails, then the company heads to liquidation. First, you try to sell the entire company. If that fails, then you go into liquidation. You can sell assets on a standalone basis. You can sell in piecemeal. You can sell the factory, land and building separately. You can sell land, building, plant and machinery together. You can sell the entire company together. So various options are available. And most importantly, promoters have no say in the business. So the directors, promoters have no say in the business. The entire process rests on the shoulder of the RP, insolvency professional, along with the committee of creditors. In case there are questions, do let me know. What are the salient features of the bankruptcy code? As I've said, it's a single insolvency and bankruptcy framework for corporates, for LLPs, for partnership firms, for proprietorship business, as well as individuals. What has been activated till now? What has been activated till now in the last 7 years is insolvency resolution as well as liquidation for corporates, which includes LLPs, and personal guarantors. They have not started for partnerships. It has not yet started for individuals in business, for proprietorship firms. It has not started for individuals yet. So only the corporate insolvency is something which is going on. Along with that, personal guarantors are also now hauled into the insolvency and bankruptcy framework. So who is the adjudicating authority? All applications will have to be made to the National Company Law Tribunal. An application which goes to the National Company Law Tribunal can be challenged to the NCLAT, which is the National Company Law Appellate Tribunal, and thereafter to the Supreme Court. So it's a three-layer judicial system. And for individuals and partnerships, it is the Debt Recovery Tribunal. Normally, we call it as DRT. Now, the difference between IBC and previous regimes is there is a shift from a debtor in possession to a creditor in control. The corporate has defaulted, the promoters have defaulted, the bankers are sitting out, taking an appointment to meet him. He's not been allowed inside. And the promoter says, agle mahine denge, 4 mahine mein denge, 6 mahine mein denge, 12 mahine mein denge. I think a lot of us also know that whenever we go for our invoices, that's what happens. So it's a significant shift from debtors in possession to creditor in control. So one of the salient features of IBC is creditor in control. No longer is the debtor in possession. So the creditor is in control through an insolvency professional who acts as an IRP, RP, or a liquidator. However, the overall supervision will rest with the adjudicating authority. The test of insolvency, as I said, debt and default. So there has to be a debt, there has to be a default, and a default of 1 day can also entitle you to file an application for NCA for initiation of corporate insolvency. So you need not wait for 6 months, 1 year, even a 1 day default you can do. So there is a concept of debt and default. Earlier, when there was BIFR, when there was CICA, it was 50 erosion of net worth. Erosion of net worth means 50% of net worth. Then manufacturing entities could apply under CICA or to the BIFR. So from erosion of net worth, the concept or the test of insolvency has shifted to a payment default of 1 crore. Prior to COVID, it was 1 lakh, but post-COVID, during COVID, it was increased to 1 crore. Even home buyers have now been included into the process as financial creditors. As I've said, it's a time-bound process. 180 days, maximum 270 days, and an outer limit of 330 days. Now, what happens during this 330 days? As everyone knows that the company starts defaulting, there will be a lot of legal cases. There will be a lot of hounding by enforcement agencies, income tax authorities, because payments are due. GST department also has a lot of recovery targets. So during the entire IBC CIRP process, there is a concept of moratorium. Moratorium means it's a calm period. Calm period means no adverse actions can be taken by any creditor. Means a bank cannot possess, a bank cannot sell, a bank cannot recover by selling assets of the company. Can they sell assets of the promoter who's a personal guarantor? The answer is yes. But can a bank recover or possess the assets of the company? The answer is no, because there is a moratorium. Can legal proceedings be initiated? No fresh legal proceedings can be initiated in any court apart from NCLT, which purely relates to the CIRP process. So the concept of moratorium is also a very important concept, so that the IP as well as the committee of creditors would focus on resolution of the corporate debtor rather than fighting legal cases. As I've already said, control and custody vests with the insolvency professional during the CIRP, which is the corporate insolvency resolution process period. It vests with the liquidator during the liquidation process. Now, the question is, if there is a fraud in the company, why would some investor come and buy the company? Would there be an attachment in future by the enforcement agencies? What would happen tomorrow if CBI starts an inquiry into the company? Because this is possible, and this has happened also. So the Parliament has introduced Section 32A, where an incoming investor, as long as there is no connection with the corporate debtor or the past management in relation to any offense, will get an immunity from any pre-CIRP offense. So any offenses prior to the insolvency commencement date he will get immunity. So the assets of the company cannot be attached. No adverse prosecution, adverse actions can be taken. No income tax prosecutions or income tax assessments can also continue after the resolution plan has been implemented and the change in management has been done. So it is immunity to the corporate debtor from pre-CIRP offenses, and this has been upheld right by the Supreme Court. Now, once a creditor applies for insolvency, the suit becomes a representative suit, because as I've said, it is an application, it is a law for insolvency resolution, it is not for recovery. So if X bank has filed an application, does not mean that an X bank will get priority in repayment. It is a representative suit, and the IP who gets appointed, the COC will sit. It will comprise of all the financial creditors of the company. If the process fails, the company heads into liquidation. No questions asked. It is a one-way track. The process ends, the investors don't come into the process, or the plan of the investor in terms of money is not acceptable to the committee of creditors. As you would have recently read in the newspapers, Jet Airways is a very classic case. After 5 years, the plan which was approved by the Honorable NCLT could not be implemented by the incoming investors. So on that, what happens is whatever EMDs or performance guarantees they have given, that gets forfeited. In one of my cases, we had approved a plan of 210 crores. We had taken a performance security of 30 crores. The plan was to be implemented in 60 days. The balance 180 crores, he could not pay in 60 days. NCLT gave him another 4 weeks. He could not pay it. So we forfeited the 30 crores. He lost 30 crores and the company went into liquidation. So if the process fails by virtue of non-receipt of plans, non-implementation of plans, the company heads into liquidation. As I've said, a priority has already been decided under Section 53 of the code in terms of who gets what. I will not get into it because this is too hyper-technical to be covered in 1.5 hours. But there is a pecking order under Section 53 which says the priority of payment, who will get paid first, thereafter who will get paid. So to give you a very simple answer, is my fee, the fee of an IP, protected? Yes, it has the first priority. The insolvency resolution process cost, all professionals who have been appointed by the RP, IRP liquidator during the process, they have a priority. After the assets are sold or once the money comes in, the first payment will be done to them. Thereafter comes the secured creditors. So the company has defaulted, someone filed an application, the company got admitted into CIRP, an IP has been appointed, a COC has been constituted. Then starts the investigation into the affairs of the company. The insolvency professional is mandated under law. There are mandatory provisions for investigating into the affairs of the company. Has the company been defrauded? So there are 4 types of transactions which has to be seen. One is a preferential transaction, one is an undervalued transaction, an extortionate credit transaction, and a fraudulent transaction. So a preferential transaction means you had given preference to someone. Undervalued means you have sold the goods at a lesser value or purchased the goods at a higher value. You have gifted some of your assets. So in those cases, all these things will get investigated by the insolvency professional and appropriate applications would be filed. If there are transactions which are fraudulent in nature, suitable applications for fraudulent transactions will also be filed. Now, this bankruptcy code is a single code, single forum for company, guarantors, individuals. Everyone gets resolved under one. So various other acts which were there, those acts have been repealed and everything now comes under insolvency and bankruptcy. There is an eligibility for participation. Any Tom, Dick, Harry cannot participate in the process. So the committee of creditors and the IP are going to put criteria for eligibility of prospective investors. So if I am the RP of a large asset, the asset is worth more than 1,000 crores. So we might have investors who might have a net worth of 500 crores or above only to participate. If you ask someone with 20 crores net worth to participate and you're looking at a value of 1,000 crores, it doesn't work. So there is an eligibility criteria for participation in the resolution process. And there is also scope for withdrawal from the corporate insolvency process. So once it gets admitted, if I am the promoter, if I am the erstwhile management, can I take the company out of the insolvency process? As I've given the example of Byju's, yes, you can take the company out of insolvency process by negotiating with the applicant who has filed or with the committee of creditors. To give you an example about the effectiveness of IBC, I was the IRP of one of the cases. He had some 8 lenders amounting to some 1,600 crores. Some 3 lenders were settled through an ARC mechanism, an asset reconstruction mechanism, where he settled them at 30-35%. The other banks wanted 50%, but the promoter was not in a mood to pay 50%. So one of the banks took him to insolvency, and after 8 months, he settled. So there was a provision to come out of IBC. The settlement was at 83%. The bank walked out with 83%. The remaining lenders were also settled phase-wise at 83%. So this is the power of Insolvency and Bankruptcy Code. Of course, a lot of criticism is also there of the code, but then at the end of the day, what you see is what you get. If the asset is worth 100 rupees, you will get 100. You won't get 200, 300, 400, unless there is an intrinsic value in the business. So what you see is what you get. If the lenders have lent huge amount of money, it is not that everything is fraud, but the first thing to deplete in any company is the working capital. The current assets get depleted very fast. The current liabilities grow very fast, right? So that is where it happens. So it finally says that IBC is not a punitive legislation. It is not to punish anyone. It is not a non-adversarial legislation. The intent is to find a resolution and an exit in situations of business distress, which maximize the value and balances the interest of all the stakeholders. Any questions till now? Or should I continue? Maybe another 7-10 minutes, I will complete my presentation. And then
You
maybe
can continue.
Yeah, you can
Everyone
continue. We will take up the question later. I'll compile those questions. So
Sure.
we'll take it later.
Right. So the resolution process overview is you file an application for insolvency, it gets admitted, an IRP gets appointed. The first job is to give a public announcement and to invite claims from creditors. Once creditors give their claims, you constitute a committee of creditors, because the committee of creditors is the MIBAP. They will have to take decisions whether to resolve, liquidate. So all decisions are taken by the committee of creditors, not by the insolvency professional. I can only propose. The committee of creditors will finally accept it, reject it, or they may ask me to propose something else. They may ask me to tweak it. They may negotiate with investors for the right value, right price, right terms and conditions. The job of the RP is to facilitate in the entire process. So how does the process run? You have to invite expression of interest from prospective investors. They are supposed to submit resolution plans. This resolution plan is a legal document. It is not an ordinary contract. It's a legal document. It is a special contract which has been upheld by the Supreme Court. It is not a normal contract between an interested investor and the committee of creditors. So once you submit a resolution plan, you cannot revoke the resolution plan unless the committee of creditors approve that. So the committee of creditors would negotiate, select one of the plan. If they select, fine, it goes to the NCLT. The NCLT may approve the plan. If it approves the plan, it goes for implementation. If the committee of creditors reject it, then the RP will file an application for initiation of liquidation. The entire process will have to be done in 270 days. If the company is operational, the entire management of the affairs of the company as a going concern is with the RP. So I have several companies which are currently operational. We have 1,200 workers in one of the steel factories at Nagpur. For the last 16 months, I'm running that. So every month you will have to pay those salaries, pay those vendors. the rate at which the material is procured, the material is sold. You are responsible for each and everything, all the compliances, audit, internal audits. So everything is on the head of the insolvency professional if the company is operational. So you are responsible. Tomorrow the SFIO may call you, the CBI may call you, the Enforcement Directorate may call you and ask questions about certain transactions which have happened during your period or which has happened prior to your period. So an RP's job is essentially twofold. One is to run the process, which is more of a compliance job, as well as a job of a facilitator, as well as a job as an investment banker. The second is to manage the affairs of the corporate debtor. Now, this is where the tricky part comes in. As an insolvency professional, as a chartered accountant, I don't have an expertise to run each and every company. But what happens is the day you step into the company, you identify key people. The first thing is whether the promoter cooperates or he does not cooperate. If he cooperates, good. If he does not cooperate, then you look at the next line of management. And in our experience, in many of the companies, the senior management, although they are loyal to the promoters because they've been working there for 20 years, 25 years, a certain amount of affinity is there, but they love their job also. They know that the promoter is now gone. It is only the RP who's the most temporary guy over here. Our job is to help him in running the affairs, do the due diligence for an investor, and maybe after a period of 12 to 15 months, when the plan gets approved, the new management can set in and the company can continue as a going concern. So management of affairs is very tricky. It's not impossible sometimes, yet it becomes very difficult, very challenging. But most of the times, if you have the senior management in place, if you have decent people, then the work becomes quite simple. In case of a company which is not operational, the task becomes very easy. You have to secure the premises, appoint security personnel, ensure that the factory or the premises is insured, make periodic visits just to see that everything is in line. So accordingly, it becomes a little bit easier to manage something which is a closed unit, but a closed unit is also liable to a lot of theft. There can be sudden fires. So it's a risky job at the end of the day, but then you have protection under the code. So what is the role of an RP? The role is to take all actions as are necessary to keep the corporate debtor as a going concern, to verify the claims, call for meeting of committee of creditors. You are the chairman of the committee of creditors. Everyone looks up to you. So as an RP, you should have sufficient knowledge about the law, about the laws which are surrounding the company. I have a company where there are mines, so I'll have to look at the Mining Development Act also. We will have to have knowledge of the other laws. Can you have knowledge of everything? The answer is no. Can you appoint professionals? The answer is yes. So a lot of professionals can be appointed who will make your jobs quite simpler. But at the end of the day, you are the signing authority. Everything goes under your signature. So you will have to understand each and everything before you sign. You'll have to collect all the information, books, records, secretarial records, asset data on assets, etc. Take control, take custody, prepare an information memorandum so that it can be circulated to the investors. Now, this is where the investment banking role, you wear the hat of an investment banker, negotiate, show what are the strengths, the weaknesses, the opportunities, the threat. You do a SWOT analysis of the company, put it in the information memorandum. So generally, the information memorandum is made from an investor perspective. Then you invite the prospective resolution applicants for submission of plans. Then comes the compliance, investigation, and compliance. If this process fails, then you move directly into the liquidation process. Liquidation is also the same thing. Verification of claims. There you had a committee of creditors. Here you have stakeholders. Everyone now becomes a stakeholder. So you verify the claims, accept them, form a stakeholders consultation committee, which will have representative of even vendors, operational creditors, representatives of employees, all the financial creditors, representatives of government. So everyone will be there in the liquidation process. Everyone has a right to vote. You prepare what is called as a liquidation estate. Estate means what are the assets which you can sell. So on the asset side of the balance sheet, you'll have immovable properties, you'll have movable properties, you'll have intangible assets like brands. You may have some royalty agreements, you may have development rights, You may have so many intangible assets. So all this will form part of the liquidation estate, the inventories, the receivables, the claims. In most of the infrastructure companies, arbitration claims are a huge component. You have 2,000, 3,000 crores of arbitration claims. All these arbitrations will have to be fought by you. The strategy in terms of how to take forward the arbitration, what to do, how to do it, all that will have to be done as a part of the liquidation estate. Now, as I've told you, can you take all the decisions as an IP? The answer was no. As a liquidator, can you take decision? The answer is yes. The liquidator is an empowered professional by law. RP's job is verification and facilitation. Liquidator's job is quasi-judicial. He is in a quasi-judicial position. So he can take his own decisions. He can consult the stakeholders, but he can also take his own independent decision. In case he takes his own independent decision, he has to intimate the stakeholders on the reasons on why is he taking a certain decision which is contrary to what they want. He also has to tell the regulator and also tell the NCLT in the subsequent progress report that he files. There are various reports which a liquidator will have to prepare during the course. There is a manner and mode in which the sale of assets will be done. So generally the manner is whether the asset is to be sold on a standalone basis, you make a parcel and then sell, you sell it under a slump sale basis, you sell a unit as a separate business, or you sell the company as a whole. Ordinarily, you give a public announcement, you do a public auction, you don't do a private sale. If you do a private sale, you will need approval of the stakeholders, and thereafter you need approval of the NCLT. So whether it is a CIRP process or a liquidation process, the threshold is 66% approval of the members. Once you have sold the assets through an auction, realize the money, then the job starts off distribution of money. And finally, once the money is distributed, asset zero, all liabilities have been paid, which you could have paid. What you can't pay, you write an email to them that I can't give you any money. This is what is the waterfall under section 53, and you are not entitled to any money. Most of the time, no service providers, no employees, no vendors, government, income tax, GST, they don't get the money. Only the secured creditors get the money, and that not 100%. In some of the cases, these are rare exceptions. Everyone has got money, including the equity shareholders. Some couple of cases are there where this is also has happened. And once you've sold everything, distributed everything, you dissolve the company. And that's how the process of liquidation ends. So with this, I end my short presentation just to give you a flavor of IBC. I'm open to question and answers now.
Thank you, Avil. It was a very wonderful, detailed presentation. I hope I'm audible, right?
Yeah, you're audible.
Okay. Okay. So I know I was just thinking if you can, if you are aware, like, or maybe throw some light on qualification requirement. Okay, because many of the members would be interested in doing RP related work. So what are the broad qualification of what kind of exam one has to pass?
So qualification is you need to have 4 qualifications. Either you have to be a chartered accountant, a company secretary, a cost accountant, or a lawyer. 10 years of post-qualification experience is what is required. If you have any of these, then you apply to any of the insolvency professional agencies. There are 3 insolvency professional agencies, one promoted by the CA Institute, one by the CS Institute, and one by the Cost Management Institute. So you can apply through them for a license. The first thing that you need to pass is a limited insolvency examination. The first threshold is if you have 10 years of experience post-qualification, you pass the limited insolvency exam. In case you pass the limited insolvency exam, then you have to give a 50-hour, there is a 50-hour course, which is an online course or a physical course, which is done over a period of 6 to 8 days. You enroll for that course, and thereafter you apply for a license. Once you get the license as an IP, you are free to practice as an IP. In case you are not a chartered accountant, not a cost accountant, not a company secretary, nor an advocate, then you need management qualification and minimum experience of 15 years in management grades. Who will check this? the insolvency professional agencies as well as the Insolvency and Bankruptcy Board, which is the regulator IBBI, they are going to check. Then there is a criteria of fit and proper person, etc. So this is broadly the qualification for people who are chartered accountants, cost accountants, company secretaries, advocates with 10 plus years of post qualification. That is from the date of passing the examination. If you are a CACS or an advocate with say 2 years, 3 years, the regulator has now come up with a graduate insolvency course, which is a 2-year full-time course. So you can enroll for that course after 2 years. 1 year is a full-time residential course. Then 9 months to 12 months, you can do an internship and then you can apply for the exam. And after the exams, you will get an insolvency license. So that is in brief the qualifications which are required for an IP.
So I can, like, suppose there's a practicing chartered accountant, they can parallelly run the IBC practice as well as the normal practice which you are doing of a certification and all the compliance related work.
Yes, so most of them, I think, barring a few people like me who are completely into IBC, most of them are into different practices, consulting, business. Many of the advocates are also IP, so they practice as well as they do IBC business. I don't say business, sorry, they do IBC profession. But
Okay.
at the end of the day, you'll have to be cognizant of the fact that IBC is a 24/7 job. There are strict deadlines, strict timelines. You are supervised by the committee of creditors, you're supervised by the NCLT, you are supervised by the regulators. And in case there are lapses, you can be reprimanded. There are disciplinary actions. Your license may get suspended. Your license may get cancelled. So all those things are there. So anyone who wants to practice IBC, I would recommend that maybe if you're multiple partners, you can probably allocate one partner who can be a full-time IP and who can dedicatedly give his entire time to IBC.
Understood.
Or
Okay.
you
And
can do
then-
1 or 2 cases at a time, depending upon the load that you have. So people like me, currently I'm running almost 13, 14 mandates. So
Okay.
99.9% of my business is the IBC profession.
So then, like, as you in between also mentioned that a lot of mining company also you do, like other special skill required for different kind of business also. Then what kind of mindset you had that to venture into such kind of area when you clear your exams?
So see, for me, I am a chartered accountant of 2003. So I've been a banker. So I worked with ICICI Bank. So in the banking, I was always in the lending side. So I used to lend money. We have seen this cycle of companies defaulting, restructuring, etc. And when I started my independent practice in 2012, I was doing a lot of consulting. And 2014, I ventured into debt restructuring. So 2014 to 2016, I did a lot of debt restructuring. And at that point of time, it was understood when IBC was enacted, all the debt restructuring would happen through IBC because many of the banks did not want to take decisions. See, bankers are very risk averse. While they understand, they don't want to sign the documents because tomorrow there may be investigation on why you did this, why you did that. So IBC gave them a mechanism where this would, once it is approved by the banks, there is also a court which is going to stamp on it. So it's a law. So it was understood that everything would happen through IBC. So for me, it was a very natural progression. So in the first month when the examination started, I cleared, I qualified. I am 41
Okay.
on the list. Today you have 4,500 people. As far as skills are concerned, see, you acquire skills as you go along. Even in an audit practice, you start with small companies, then you go to larger company, you try and understand. So skills is something which you develop as you go along. And as I've said, there is a lot of professionals whom you can appoint. There is senior management also. In most of my cases, I've been fortunate that the senior management has been cooperative. So you're not supposed to know everything, but you are supposed to apply your mind before you sign any documents, you take any decisions, because decision making is ultimately yours.
Okay. And when somebody posted on the group chat also that how do you generally generate business through? Like, is it through like board only gives you allotment, or it's a banker who has preferred you, or how does the gamut work there?
So see, the ultimate game, I would say, is the banks. So generation of work is twofold. One is initiation when you are an IRP. the same IRP at the end of 30 days after the first month has to be confirmed as the RP, and that confirmation would be done by the banks. So my practice predominantly revolves around taking mandates from banks. So I generate work from banks. I don't take up Section 9 mandates of operational creditors. I don't take up mandates of Section 10 because generally in Section 10 you'll get replaced. In Section 9 you'll also get replaced. But if someone who doesn't have access to banks, what will you do? You take Section 10 application. In the first month you go meet the bankers, tell them what you do, and convince them that you are the right guy to continue this assignment. And accordingly, they will confirm you as the resolution professional. There is also a process of empanelment with the banks where they look at your qualifications. So they will empanel you. And mostly empaneled people are appointed as RPs or IRPs. So to generate work, NCLT can also give you work because there is a list of IPs in the NCLT also. So wherever an IP is not proposed or the NCLT is not happy, they can propose someone from the list. So generation of work currently is difficult because there are too many players. A lot of cases have already gone down the water, but then one of the recent changes which has happened is the RP cannot become the liquidator. This is what the board has said a year back. So a lot of RPs like me, where the process fails, I was to become the liquidator earlier because the bank said he knows everything, right? Why do we need you guy? But now because of this, every RP does not become liquidator. So there is a good amount of scope for people to generate work. But primarily, I would say you have to go to banks. It will take some time for you to set up this business, to get repeated referrals. It might take you a couple of years. You can start with one or two and then you keep on getting.
Okay. And you in between mentioned that you need to take a lot of help of professionals in between, maybe lawyers and all those kind of legal professionals. So as a chartered accounting firm, like, maybe I'm not, I don't want to start a fresh practice of a RP. Okay, but I is there any way we as a firm or maybe like, entities can help you in terms of compliances, or what are the ancillary activity which, we can help RP as such?
Right. So a lot of RPs who are invested in this profession, like chartered accountants, will have their own infrastructure, own setup, own people, own bandwidth. So there are many people also who are retired ex-bankers. They need support. They don't want now to invest into, because for them it's a 5 to 7 year thing because they've retired at 60. And a lot of this business is also captured by ex-bankers because bankers understand the language. And they know the nitty-gritties of the system. So a lot of these people need support. So you can provide support as for claims processing, verification of claims, admission of claims, conducting the meetings, writing the minutes of the committee of creditors meeting, assisting him in taking control, custody, appointment of security personnel in various compliances as income tax, TDS filing, GST, audit, account writing. So these are some of the ancillary activities. There can also be, if you have an investment banking background, you can also become process advisors and tell the committee of creditors and the RP that I can go and find investors for you. So that is also a very large activity of process advisory, where people do these activities even without being IPs. A lot of large firms, the top four, the big four firms, have now shifted to process advisory support services. They don't want their partners to take on the job of an IP because the job of an IP is risky. A lot of disciplinary orders have been passed against IPs of big four firms which are partners, which obviously brings a bad name, a bad press for the entire entity as a whole. So you can do ancillary services without wearing the hat of an RP. But what is glamorous, what is challenging, what is the job is the job of an IP, as I understand. So if you ask me, you should become an IP rather than being at the fringe. But then to each his own, you can take a decision, because if you have a sizable audit practice, you don't want to invest too much time here because you're already set up there. So it depends on whether you take a new partner, explore it by giving support services, etc., etc. You can also become a valuer. You can also become a forensic auditor. Now, transaction audit is compulsory. So every assignment will need a transaction auditor. it will need 2 sets of valuers. So as chartered accountants, you can also become an SFA valuer, which needs a 3 years post-qualification experience. So you can become a valuer, you can become a transaction auditor, you can get into forensic audit, you can get into cash flow management, payment processing. So there is a lot of ancillary work which CA firms are doing currently and will continue to do, because a lot of RPs cannot do everything by their own self, because we don't have that bandwidth even in our internal teams.
Correct. So maybe in to start with, for a practicing firm, to start with, at least we get some exposure, then maybe venture into this kind of full-fledged practice, or maybe have one more section of practice as such. Okay. Now, important thing which comes at the end of the day is what is the revenue? Okay, like, do you get a monthly revenue, or it's a fixed revenue? Plus, and since companies are already defaulted, how do you secure your payments as well as the payment of the professionals who are getting associated or maybe working tandemly with you? So how does those payments get secured, and how the fees have been there in this?
So like in every profession, I mean, you need to give a consent. So before you need to give the consent, you see which company it is and what sort of asset. So you can download the balance sheet from the ROC or any website, and you come to know what are the assets of the company. As long as there are assets in the company, your money is safe and secured because you have first charge. So you and your professionals will have first charge. In case there is no money in the company and still it gets into CIRP, you will have to tell the COC that this is your headache now because you are a lender to a company without any assets. So you take a decision. So generally the COC will fund, but they will cut short the process and take it into liquidation. So there are a lot of companies which are corporate guarantors, which have no assets. Now, if these companies get into CIRP, someone will have to fund. So the person who has initiated the application will fund. To give you the answer as far as remuneration is concerned, if you ask me, yes, it is remunerative. It was very remunerative, but currently, as too many players come into, there is always a fee cutting, which happens in any profession as you progress. But currently, we are also in a position to take upon more assignments. So the regulatory framework is you can take up to 10 CIRP assignments. You can take multiple liquidation assignments. So there may be people like me who are handling 12, 13 assignments at one point of time. You can handle 6, 7 assignments at a time. So you need to invest in people. You need to invest in infrastructure like any other profession. But yes, it is remunerative. During the CIRP process, it's a fixed monthly remuneration. Something is guaranteed even by the regulator itself, like up to 50 crores of claims. The minimum fee is 1 lakh, 50 crores to 500 crores, 2 lakhs. 500 crores to 2,500 crores, 3 lakhs, and more than that is 4 lakhs, and 10,000 and above is 5 lakhs. So
that is monthly.
Minimum fee is there. So earlier, what used to happen if it was a 10 crore claims company, someone was quoting 30,000. At 30,000, it is not remunerative. I don't know how he can manage this, but he was taking for the sake of understanding, experience, etc., etc. But now the regulator has fixed a minimum threshold, which is 1 lakh. So if you ask me, small companies, minimum headache, 1 lakh per month is remunerative. If the process goes on for 12 to 15 months, you make a decent 12 to 15 lakh rupees. And if you have some 5 assignments like this, it's a good thing. If companies are non-operational, the work reduces over a period of time. If companies are operational, you have a constant stream of work. But at the same time, operational companies, like I have a company where we have 1,200 workmen and employees. The entire system is there, right from the CFO to the CS to the legal teams. So everything comes to you. You don't have to make or break your head. So you have consultants, you have professionals, TDS, GST, everything gets filed on time. You just have to monitor and supervise. So operational companies will give you the flexibility of using their resources rather than using your resources. So it's basically how you evaluate. But then there are certain times when payments get delayed, but payments are assured. So if you are a support service provider, always ask the RP, are there assets in the company? Payment may get delayed, but payment will for sure come. I have cases where I've got money after 3 years, but that's fine with me because payment is secured. I don't need to worry because I sign my own checks.
Correct. So you get a signing authority of the bank itself, right?
Yeah, so I sign my own checks. I know I have to get paid, right? My advisors have to get paid. It might get delayed, but it will get paid.
Correct. And then what kind of infra you need to have, like maybe a staff or maybe a technology or something, and then like is it easy to get this kind of staff?
So generally, as far as hiring is concerned, we hire chartered accountants, we hire lawyers, we hire company secretaries. So the requirement of a job is that you will need professionals along with you because it is application of mind. It is not work. See, IRP job is not working 24/7. It is application of mind. It is interpretation. It is understanding what the other guy is telling you, asking questions, and then probably coming to a conclusion. Sometimes you meet really high profile people. For that, you have to understand the business also. So you need staff who is going to assist you in effectively doing it. So as far as I am concerned, we generally hire professionals. And yes, it's easy to get staff, but it is very difficult to get trained staff. Trained staff in IBC is very difficult. So we generally hire professionals with 0 to 3 years of experience. That's what we generally do. We train on the job. Chartered accountants or any professionals take 2-3 months, and a CA who's done a decent articleship will learn in 3 months.
Understood. And so the when you say that like you have to have a team, then there are a lot of compliance which you have to do. So how do you think RP as a work life balance in terms of what are the pressure period, what are your lean period or something?
So there is no lean period as far as IBC is concerned. See, if you have only one assignment, then the first month is a pressure period because you have to take control, custody, understand nothing has to go wrong. Because from the time you take control, in the first month, you don't know whether there is a theft over there, whether the promoter is doing something. You don't know. I mean, you are suspicious. You are a bit anxious. So the first month, there is a lot of load till the first COC meeting happens. Thereafter, second, third, fourth, fifth, sixth, it gets down. But in the investor search process, we've seen in some cases, there are 30 prospective investors. So if 30 people participating in the process, then getting the due diligence done for 30 people, expecting plans. Like in one of the cases, we had 12 resolution plans. So if 12 people are interested to bid for that company, the volume of the work is suddenly going to go up. So you don't know when the volume of work is going to go up. Now, suddenly you have a strike in the factory. Day before yesterday, I got a call from one of the factories at Tarapur saying that all the workmen have come outside and they're refusing to work. Now there is a strike at the factory. And if the strike continues for 2 days, 3 days, 4 days, you'll have to go there on the side, be there, try to understand what it is. So if you have something else which is important, which is pressing, you can't help it. You will have to go. If the NCLT calls you tomorrow, says that the RP has to be personally present. I want to understand from the RP, what is this matter? You have to be present. So you can't really predict. But as far as if you have sufficient experience, I think work-life balance is decent. I mean, it's not as if it's a very scary job. But yes, in certain periods, you will do find, I would say, you become a lot anxious, like you have the risk of an FIR getting filed. To give you an example, during COVID period, there were some 200 workmen who were not getting paid and they complained to the labor commissioner. The labor commissioner there at Ranchi was so fast. He used to send me a notice at 12. I used to reply to him at 8 in the night. Next day morning, again 12, a notice. And after 6 days, he said, I will file an FIR under the Disaster Management Act. Now, filing an FIR during COVID period is again a problem. Now, you will have to go to the NCLT, file an application overnight, take protection. Otherwise, if someone arrests you, there have been cases where RPs have also been arrested. In one case, the Supreme Court intervened and told the police that this is not the way, an RP is an officer of the court. This is not what to do. But it all depends whom you've rubbed whom at the wrong side, right? So there have been cases where we have been gherowed by people. My team in one of the case was detained till 11 o'clock at a site and they were not allowed to come. So
Wow.
these are issues which keep on happening. In one of the cases at Calcutta, there was a fire at the middle of the night. Next day morning, I had to catch a flight to Calcutta, be there, file those FIRs, be in the police, see what has happened, look at insurance. So it all depends. I mean, the work is this, but the work is interesting. I mean, every day is not a dull day. You don't have a dull day in IBC. you are learning something or the other, something interesting. To give you the mining example, there are obligations under the mining because you are going to mine coal. Now, this coal can also be sold in the open market. So in one of the NCLT orders, the coal department said that they are selling the coal in the open mine. So the NCLT said that the RP is personally responsible if anything this happens. How can you hold me personally responsible? We went to the other court and the other court said personal responsibility is not there, but you will have to work as per the coal development agreement. So there are challenges, but then it is not a very difficult job to do at the end of the day. You need to have confidence. I mean, that's the most important thing.
Perfect. There are a lot of questions which are not on a typical like provisions or maybe a like nitty gritty of a IBC. I will take those if possible, time permits. I want to more cover those practice related work rather than going into complications of IBC law as such. So there's one interesting question which has come. How do you see in case future when the resolution starts for individual? You mentioned between individual and partnership is not as of now in gamut of IBC as such. How do you see that in future practice looks like in looking at the competition as well as the future opportunities?
So there will be a lot of opportunities in IBC. One is as an IP, second is as support services. And once the partnerships, individuals will start, it will be a huge opportunity for all professionals. In fact, IBB at that point of time said that there will be a requirement of almost 10,000 to 15,000 IPs. That is what it was. Today, we have roughly around 4,500 IPs, but I think more than 40% of them have taken licenses, but have not even done a single case. Right. So a lot of people have taken licenses. So the requirement of IPs is going to go up multiple fold. But I think there is enough time now for the other leg of IBC to start. Maybe 2-3 years more is what I think currently. But IBC is not going to go out of favor. There will be tremendous scope even in the future. And what do you need? You need only 5 to 6 assignments to keep yourself busy to make it a remunerative vertical within your own professional organization.
Perfect. So I just want to check with Nihal how much time we have more for question answer. Now these are more on a typical provisions of IBC as such. So Nihal, you can just let me know if we have a time to cover those on.
We can take up some more questions for about 5 to 10 minutes, and maybe just couple of minutes before 6 we can have the close.
Perfect. Okay. So there's one question which is in case an auditor have to vacate their office due to resolution plan, then like you have an idea how the process will take up? Like you will have to appoint a new auditors, and then is it of vacancy by law or by resignation? How does it happen then?
So generally, if an auditor has to vacate, I have not seen resolution plans, at least in my cases, where the resolution plan says that the auditor will vacate upon approval of this plan. So vacation of an auditor, once the plan gets implemented, will happen in the normal course in accordance with the Companies Act. I don't think it should happen pursuant to a provision in the resolution plan and the order that there is a deemed vacation of office of the stat auditor. You can do that. But I think at the end of the day, you'll have to do those compliances, call for a board meeting, call for an AGM, and then replace the auditor in the normal course. I have, at least in my plans, if I see such a clause, I am not going to accept that clause. We will negotiate and say these are compliances which we'll have to do. I mean, IBC is not an umbrella for hire and fire. So in most of the cases, we've seen people putting a clause saying that all the workmen will be terminated. I said, you can't terminate workmen on approval of a plan. You will have to run the normal process, retrenchment, compensation, whatever is there, the terms of the employment will have to be honored.
Okay. And how do you see, like, DRT is there, then surface I is there, and then the IBC has come up again. So how do you see entire gamut of resolution is working now, which is being more preferred by bankers as such?
So IBC is an additional tool. If you ask banks, they are not happy with IBC. I mean, that is the general perception. But what is the escape? We don't tell you to take cases to IBC. IBC is not the baby of an RP, right? It is basically you have done a lending. Now you have to decide what course of action you have to take. So the bankers would first prefer a settlement, OTS, then they go for recovery mechanisms like SURF-AC, DRT. And finally, IBC is what we have seen. So the first preference for them is the promoter comes settles either by an OTS or a restructuring, or they do recovery by themselves through SURFACE DRT. But in case it is a large organization, they have no choice. They will have to go through IBC because you can't recover through them. How will you recover current assets? Who is going to take control? Once you take control over the asset means if it is a dead asset, it is fine. Non-operational. Operational company, banks can't take control. Then they sell it to an ARC. The ARC job is to restructure, but that is what is not happening. So banks would prefer IBC in that case. So it's one additional tool. I mean, it's just one of the additional tools, and it depends on what they want to choose. If you ask
Understood.
me, IBC is the best thing because if he doesn't settle on initiation, then obviously he was never going to pay you back.
Okay. And you mentioned that there's one question on this limit of 1 crore. Okay. So is it per creditor or it's a total liability of a bank of the corporate, or how is the 1 crore calculated?
Per creditor, the applicant who is initiating. So for example, Avil Menezes has pending invoices of 1 crore 10 lakhs against an ABC company. So if I am applying, my individual threshold will be 1 crore 10 lakhs. If I only have 10 lakh rupees outstanding, then I have to go to commercial courts, file a civil commercial suit. So the threshold is per creditor. Creditors can come together and make that threshold of, like, employees, 10 employees can come together and say, okay, now we cross the threshold of 1 crore. So they can come together, but that depends on the NCLT.
Understood. And there's one very interesting question which has come, like you mentioned, we see that a lot of your case can be a complicated case. It could be a simple case, a small case, or big case. Now, how do you make a composition of your team? Like how how much lawyer will you need, or what kind of team you'll need? So when you employ someone, how do you gauge those kind of assignments?
So in my experience, I mean, we would see whether the company is operational, not operational. If it is an operational company, then you will need team, one set of team who is going to look at the operations, cash flows, and the management and the inventory, purchase, sale, etc. One set of team, we do it for claims management. They will have to look at the claims because a large amount of claims are going to come. For example, if it is a real estate project, and in a real estate project, there are 200 home buyers, you will be flooded with claims. I am the RP of one of the future group. We have 4,000 FD holders. We have already got claims of 2,300 FD holders till now. So it depends on the assignment, the complexity. So if it is operating, you have one set of people who will look at the operations, assets, takeover, control, custody, one set of team which is going to look at the claims, and one set of team which are going to look at compliances. Claims, generally after a month or so, the volume of claims will die down. So some of that team can then get into the process advisory process. You may have company secretaries who can look at compliances and notices of the meeting, minutes of the meeting. And lawyers, generally, we appoint external firms. So we appoint external firms as lawyers to advise you.
Understood. Okay. And
not accepted.
sorry, I think I'll take a last question on this statutory dues as such. When you mentioned that the priority now have been shifted from government dues to the corporate dues as such, how this has been taken as by the government department, like when you go for an assessment, when you go for a demand hearing, how our bank are been taking it?
So as far as department is concerned, I think more or less people know that under IBC, nothing can be done. So what we are now seeing is the moment they know the company is in NCLT, they will complete all the assessments. And if the demand was to be raised of 10 crores, they will raise a demand of 100 crores because they know the company is not going to challenge this because it doesn't matter to him. So we've seen huge claims coming from these government departments, while a lot of litigation has happened. Now, the Supreme Court has also very clearly said that statutory dues are not sovereign dues. A clean slate mechanism has to be given once the resolution plan is implemented. No assessments, etc., can be invoked by any government agency, be it income tax, GST, etc. So by and large, they understand, but some of the department officers, If they don't understand, then they have a problem. They will come and attach your bank account, which happens with us very routinely. Then we write to them. It takes a month, 1.5 months. Sometimes we have to go to NCLT for vacation of that attachment on the bank account. But 7 years, 8 years of IBC, government now knows that they are down in the priority. They understand, they litigate just to show that they have done something to protect the government revenue. Otherwise, I think by and large, they know that nothing is going to come out of this process for them.
Okay, perfect. So I think with the limited time which we have, and you have covered it thoroughly with all aspects, including your what are the process, what are the requirement qualifications, and what is the practice gamut as such. I think it has been very well covered, and thank you so much for your valuable time. Now I think Nihar, I will request you to take it over from here for all the further proceedings.
Yes, thank you, Amit, and thank you, Avel. I think a wonderful session. I think we had a constant participation all throughout from the members who had registered. Now I would request our joint convener of the CA, Ritesh Savla, to present the well-deserved vote of thanks.
Friends, as we come to an end to today's session, I am pleased to present a hearty vote of thanks. On behalf of CVOCA, I would like to thank CA Avel Menezes for his engaging presentation explaining broad frameworks of the IBC and guiding us on multiple opportunities available in IBC and IRP practice for CAs to extend their practice. We also thank our CA Amit Chheda for doing an excellent job as the moderator and discussing various angles of IBC and IRP practice, including the queries raised by the participants present in this session. Thank you to Practice Management and Development Committee for arranging this session and everyone who have attended and contributed to making this event a success.
And the last thanks goes to Manoj Bhai also for such a wonderful speaker and a wonderful article with him.
Absolutely, absolutely.
Yeah.
Thank you, Avel. Thank you so much. I think it has been a wonderful session.
Thank you, everyone. Thanks a lot.
Thank you so much.
So